Hello and welcome to Martyn Lucas Investor. My name is Sensei and you're watching a special live stream for the jobs report. It is coming out in 55 minutes. The time is at the bottom of the screen. On the side of the screen, you can see all the topics we're covering all over here. You can see all the topics we're covering today. There's going to be some top stories. We're going to be covering a little bit about the new regulations here in Europe, about MiCA, what that means globally, what that means for your money, if you are situated in Europe, the UK, and what it means for crypto globally. Then the main event of the show, which is the jobs data. We've got a cheat sheet for you. We'll be covering that live. I'll give you my thoughts and reaction to it, and then we'll be going over to Martyn's live stream. So everything lands at once today. The June jobs report has been pulled forward to today because tomorrow the US markets are closed for Friday for the Independence Day. The bond market actually will shut early today in the US. That's about 7 p.m. UK time. The bond market will shut early in the US. And pretty much half of Wall Street is probably already at the beach. So there won't be that much volume today, apart from this morning. They'll probably go home right after the jobs report. And that will set the tone for the long weekend. So if you are here, please do hit the like button. Please do subscribe. If you haven't joined the newsletter yet, you can sign up for free and at least get the free newsletter if you want to go and get the perks and benefits of it. For example, the full newsletter, the deep dives, the cheat sheets, the chart trading course, the trading view indicators, the net worth tracker, the Sundays with Sensei, the trading post, the £5,000 portfolio challenge, all those perks. You can sign up for the premium plan and there's a 25% discount in the description and pinned above. So you can join the full newsletter or join for free. That is your choice, and I hope you join us with the premium. So yeah, that link is pinned above and it's also in the description. If you have just tuned in, hit the like button. We are going to be covering the jobs report. So here's the part that makes today different from every other jobs day in the last 2 years. Markets are no longer debating when the Fed cuts. With core inflation, core PCE inflation at 3.4% and headline above 4%, traders are now pricing roughly a 34% chance the Fed raises rates as soon as this month. So we can be expecting rate hikes in this month's FOMC with Kevin Warsh, the person who wasn't going to raise rates. The market is now starting to price that in. It's not all about, are we going to cut rates? When are we going to cut rates? The market's flipped. It's when are we going to raise rates? Are rate hikes coming this month, next month? I'll give you my personal thoughts on it, but the market is pricing in rate hikes as early as this month's FOMC meeting with Kevin Warsh. So new Fed Chair Kevin Warsh built his reputation on inflation discipline, and strong jobs numbers hands him the cover to use it. So he really cares about inflation, and if jobs are strong, So today we're going to look at the jobs data. If they're strong, then they can raise rates all they like. So that flips the usual logic. A strong report means hike fears, higher yields, and strong dollar and pressure on stocks, crypto, and gold. A soft report revives cut hopes and gives risk assets relief. Unless it's so weak that it reads as recession. Keep that lens on every number I'm going to show you here. So let's go to that report. Let me show you what the cheat sheet looks like so you can get a glimpse of it, and we'll cover a little bit of it. But of course, not all of it because it's for the premium members. So if I go to this sheet over here, I will give you some more context, and then we'll come back to it after we do our market watch. Today's golden rule is good news is bad news. Unless it's good news is bad news, and bad news is good news unless it's very bad news, because that would be bad news. So the golden rule today is if jobs come in very strong, that's not good. That means no rate cuts. If jobs come in weak, that's great, rate cuts. If jobs come in very weak, that could read as recession, and that's not good. So there's a balance to be played, and that's why we have the full report on it. So we're going to be covering non-farm payrolls, average hourly earnings, unemployment rate, initial jobless claims, labor force participation, and U6 underemployment. All of those coming up later in the show with the jobs report in 50 minutes time. Let's go over to our first bullet point today, which is the market watch. Let's see what's going on in the market this morning. Crypto having a nice bounce after yesterday's multi-month, multi-year lows for Bitcoin, for example. Let's see where we are at with many of these assets. Let's start off with the top of the list, which for me is the biggest mover up this morning, XRP. XRP up 2.9%. A nice bounce again at $1. That's why I said I'm buying at 105 and I'm buying at $1. Now we've got a nice bounce already up. Well, it's 108, so we're already up 8%. Very easy to see. So already up 8%. What would I be looking for to take that as a trade? Probably 130. If we go up to 130, then I'll probably sell the position I bought at $1. If we don't get that high, which maybe we don't. Probably, would I say probably we don't? I don't know. $1 is the line in the sand. We could have a very nice bounce here. Everyone could get very bullish and then come back over, or we just we don't even hold it for long and we come back down below $1. That would be very weak. I would expect some sort of bounce at $1, potentially take it up to 120, 130. And if we do, then I'll take that as a trading position, sell some of my XRP. If we don't, if we have weakness around 110, 115, then we roll over. Then I'll probably just I'm not going to take profits that early. I'll probably wait and buy some more at $1, or take it all the way back down to our next targets, closer to 80 cents and 55 cents. So XRP having a nice bounce today, up 3%, but nothing to get too excited over. Chief says, is the newsletter part of Discord? So no, the newsletter is separate to Discord. The newsletter and the Discord are nicely integrated. So the people that take the most advantage are the Discord members and the newsletter members, because you've got the Discord and the newsletter, you've got the whole thing integrated together. If you've got Discord, you can get a glimpse of the newsletter within Discord. You've probably seen my Sensei chat. That's where I pop in and have the most conversations. But half the Discords, or my part of the Discord, is locked if you are only a Discord member, and of course all the other perks such as the trading course, the trading challenge, the cheat sheets. That's only for the newsletter members. You can sign up if you are a Discord member. You'll get a better discount inside Discord. So Chief, I think you are a Discord member. Just go into Discord, go into the left-hand side, look at the channels. There's one called Unlock Sensei's Insights. There, because you're a Discord member, you get a very, very nice offer, which is better than what we give publicly. Good afternoon, Sensei. Hello, Karen, and anyone else who wants to join the newsletter. Maybe join Discord first and then join the newsletter. That way you can get a nice discount, or just go straight ahead, go to sensei.news and sign up. Or use the link that's pinned above for that 25% annual discount. So hopefully that answers your question. I'm always looking at the chat. I will come to the chat in a second. If you guys, a lot of good afternoons. Hello, Maurice. Hello, Paul. Hello, Slim. Hello, Kurt. Hello, Raccoon TV. Hello, Karen. Hello, Liz. Thanks for answering the question, Liz. Yeah, there you go. If you guys have just tuned in, say hi in the chats. Please do hit the like button as well. Jobs report coming out shortly. We're just having a little market watch first. XRP up 3% today. Ethereum up 2.3%. Again, not too interesting. Where would I buy Ethereum? Maybe 1,400, 1,130. Oh, God, if it goes down there, it wouldn't have had a nice cycle. Yeah, it should, in theory, if Ethereum was looking really strong, this would be the bottom for Ethereum, but unfortunately, Bitcoin has lower to go, XRP has lower to go, so maybe Ethereum's not looking too strong as a coin itself. And I was expecting this. I was expecting XRP to show a bit more strength than Ethereum, and that's certainly taking shape. Because if you look at where we are, Ethereum from its bear market lows last cycle to where it is right now, it's about 70% away. So we can look at it as a drop. Actually, let's look at it from where we are to the lows last bear market. It would require another 46% drop. I believe XRP would require less. 108. Where we are now to the bottom, it would require a 72% drop. So yeah, XRP holding up a lot better than Ethereum. It's not as close to its lows from the last bear market, and you want to see higher lows. Ethereum is coming up to potentially the same low at the end of this bear market, so that's not showing too much strength. So XRP currently showing a lot more strength than Ethereum. Bitcoin is probably showing the most strength because Bitcoin is still about 72% away. Bitcoin 72% away. And what did I say XRP is? XRP is also 72%. So very surprisingly, you would expect all altcoins to underperform Bitcoin, but Bitcoin and XRP are the same percentage away from their lows. So XRP as an altcoin is actually holding up the same as Bitcoin. Anyway, looking at Bitcoin's charts, always keeping an eye on these things. Let's see where the bear market lows are. Just keep an eye on what's showing strength in a bear market. Yes, XRP is going down. Yes, Bitcoin's going down. Yes, Ethereum's going down. But what's showing strength relative to Bitcoin, that will give us an indication on what's going to show strength in the bull market as well. That's one of the indicators I look at. And right now, Ethereum's showing XRP showing a lot better strength than Ethereum, potentially showing us that that XRP will perform a lot better than Ethereum in the next bull market. Again, the bear market's not over, so we can't say that straight away, but it's looking very likely. Bitcoin at 61,000. It had its worst this morning. Yesterday, it went down to 57,000. That's the lowest Bitcoin's been since September of 2024. Lowest price for Bitcoin in about 2 years, in about 665 days. So yeah, nearly 2 years lowest price Bitcoin has seen. Again, people want to argue it's not a bear market, it's a bull market. People want to buy every jump up. I've been telling you, bear market, the trend is towards the downside. Bear flag, breakdown. The trend is your friend. Use the indicators. We look at there's the code for the indicators. But there's the indicators. Below the momentum band, you're still in a bear market. Above the momentum band, you're in a bull market. What are we right now? Below the momentum band. These are one of the trading indicators we give you. Very, very simple to see. The momentum band, we're below it. The trigger alert, again, turned bearish for Bitcoin at 80,000. It turned bearish on Bitcoin at 120,000. It turned bearish on Bitcoin at 95,000. It allowed you to grab some of those bounce on the way down. But essentially, it's still bearish right now. The trend is your friend. The trend is towards the downside. Don't fight the trend. Yes, we're now going to get a little bit interesting. Maybe one final capitulation. Maybe it's time to start dipping our toe into the cryptocurrency market. I've started buying a little bit of Bitcoin, a little bit of XRP. But I assume lower prices. And if not, I've got some buys in. But remember, the trend still is towards the downside, and everyone. This is probably a lesson more for the future. If the trend is towards the downside, maybe stay out the market. Bitcoin up 2% today. Silver up 1.5%. Silver trending towards that $50. Gold down. Gold up 1%. Again, that's shown some real weakness. Again, rate hikes aren't good for gold. If rate hikes occur, then gold becomes less attractive. Gold's at around $4,070. If we get really good jobs data, that's not good for gold. If we get really good jobs data, that's not good for risk on assets, especially some of those smaller caps. FTSE up 0.5%. The US bond market is holding this massive structure. It's still, again, the bond market will move very slowly, but we've got this multi-year structure showing a breakout towards the upside. If the bond market goes up, then none of these stocks, or a lot of stocks and crypto are less, at least especially gold as well, become a lot less attractive, because if you can earn 4.5% for doing nothing, and then you can earn 5% and 5.5%, then people would say that's good enough. No risk, and I earn money. And it looks like the bond market's going to go higher over the next couple of years. And it looks like it's going to trend that way for many years now. Again, the debt market, the debt of the US is playing into that as well. The S&P 500 down slightly today, NASDAQ down slightly, and oil. Oil, as I've told you, inflation has peaked. That is the saving grace for a lot of risk on. If inflation is peaked, then maybe they don't need to cut rates. Sorry, maybe they don't need to raise rates. Oil is now at $67. This is lower than when this, for the first time ever, we can make the statement oil is lower today. Oil is lower today than it was before the war started. We're at $67 now. When the war started, we were at $68. So for the first time in the last few months, we can now say oil is lower now than it was before the Iran war started. Obviously, oil was trending up slightly because of the potential news of the war starting, but oil was very low anyway. Oil was at between it trended from $56 where we saw our double bottom when we took that trade, $56 to $66. That's how much it went up on the fear of the war. But oil was pretty low. I mean, $56 for oil a barrel is below average for the last sort of 10, 20 years. Just about average or below average. So oil is now trending down. 70% of the reason inflation went up was because of oil. Oil's now down. So inflation's probably peaked. That's your market watch. Let's move on to our top stories. If you have just tuned in, we are 40 minutes away from the jobs report. We will come on to it. We just did a market watch. Look to the top sort of 6, 7, 8, 10 cryptocurrencies, gold, silver, the S&P 500, NASDAQ, and oil. Now we're going to go over to our top stories within our newsletter. Remember, you can get the top stories for free as a newsletter member. You can sign up at sensei.news or use the link in the description. And if you want to become a premium member, you can use that link to give you a discount for that annual plan as well. Top stories today are jobs day is here. June payrolls land at 1:30 p.m. UK time with 115,000 as the consensus and rate bets on the line. We can have a quick look at these rate expectations. We go to the Fed Watch tool, a very nice place to see what the market's pricing in. And we go to our meeting this month. And this is a little bit crazy. This is not what I would expect. I wouldn't think rate hikes would be this close. But the market, and this could change today after the jobs report in 40 minutes. The market is pricing in a 30%, look over here, 30% chance that there is a rate hike. The current rate is 3.5 to 3.75. Remember, it's a range in the US. That's the current rate. There's a 70% chance we hold that rate. And there's a 30% chance we actually raise rates. Kevin Warsh comes in, raises rates on his second meeting as Fed chair. I mean, what would President Trump say to that? What would that do to the markets? No one was expecting rate hikes. I mean, me and Martyn were expecting no rate cuts, but we weren't expecting rate hikes. The market's wasn't expecting rate hikes, and now look what's in front of you: 30% chance of rate hikes. I don't think the market is positioned for that enough, and I don't think it will happen. But let's move over to September, the next one. So we won't get one in August, but we won't get one in September. And it looks like we're going to have a rate hike. Whether it's this, again, this chart shows you where will rates be after that meeting. So this is taking into account that there might be a chance it'll be in July, and there might be a chance it's in September. But whatever way around it happens, there's a 49% chance that after the September meeting, which is the meeting after the one in July, remember you don't get one every month, the meeting after the one you get in July, that rates are going to be higher than where it is today. Look at that. And there's even a 14% chance they're going to do a secondary rate hike in September, and there's a 14% chance we're going to have two rate hikes. There's a 14% chance that we're going to get one rate cut in July and one rate cut in September, one after each other. 14% chance of that. 49% chance we're going to get a rate cut either in July or September, and only a 37% chance of no rate hikes at all. Let's get forward to December, the end of the year. Where are we going to end up with rates? The market is pricing in. We could be a whole percentage point higher. We could have 4 rate cuts. That's a 1% chance. There's a 10% chance of 3 rate hikes. There's a 31% chance of 2 rate cuts, and then the consensus is 1 rate hike. So the market seems to be very confident that we're at least going to get 1 rate hike this year. I'm not so confident. I mean, the market's even saying maybe 4 rate hikes. I would say this year, maybe in December, maybe in October. I don't think they're going to do it as soon as July or September. I think they're going to wait for some more inflation data and more jobs data, unless something horrific happens, unless inflation is actually, there's something else in inflation that's really setting it off apart from oil. Yeah, so yeah, it's very interesting. Let me see. I'm just getting some comments in through here. Yeah. So yeah, we will be live up until the bell today, and then Martyn will be live on the bell as I will be going right the way through to the bell, giving you all answering all your questions. So we'll come on to Q&A towards the end of the stream after we get the jobs report. If you have just tuned in, please do hit the like button. Please do subscribe if you haven't done so already. We're covering the jobs report, looking at rate hike expectations. Very, very, very interesting. I don't think there will be rate hikes in the next couple meetings. The Fed Watch tool is saying yes, there will be. We'll see. Either way, we're not going to get 20 rate hikes. I think worst case we'll get 1. That might shock the market. That might be the thing that initiates some sort of crash. But we'll see. It's all data dependent, and that's why we're going to look at the data. They're not going to raise rates without having a few more. But without looking at the jobs report today and looking at the inflation report later this month. So it's all data dependent, and depending on what the jobs report is today and the inflation report is later this month, then they'll make their decision. So we've got some time to really figure out what's going to happen, and it's all going to be based off this jobs report and PCE inflation, CPI inflation, and PPI inflation. So we're going to cover that. That's all going to be before the FOMC. And remember, this is the first sort of jobs data, CPI, inflation data that we will get post sort of war. We can start saying post war because it does look like this peace deal is happening one way or another. And the reason I'm saying that is because of oil. Oil prices are very, very low. So that's the important part. Post the oil drop, what is inflation and jobs going to look like? Because that's what the Fed will look at. So anyway, that was one of the things to look at. The next one is Meta. Meta's $179 billion pop. Meta will rent out its spare AI computing, and the stock jumped 10%. So very bullish. Congratulations, all Facebook Meta investors. I will go to the comments in a second. We were curious what the market does after the news. We'll see what the market do. I'll continue to be live. Chips start Q3 with a thud. So Q3 has just started the 1st of July. Yesterday, Micron shed 138 billion in a day after the H1 winner got sold. Tesla. If you're a Tesla investor, if you're a Tesla fan, if you're a Tesla investor, the numbers come out today. And what numbers? Well, it's delivery numbers. This always moves the market. Tesla do release their delivery numbers every quarter, and today's the day they release theirs. So depending on how many deliveries they did, we'll see what if that's bullish or bearish for the stock. The Wall Street wants sort of at least 406,000 deliveries. But let's see what the actual number is later today. Again, if it's more, better. If it's less, it's not good. Bitcoin hit a 21-month low, nearly a 2-year low. Bitcoin touched $57,700 yesterday, its lowest since September of 2024. But it had a nice bounce, and it's bounced back to over 61,000 this morning. It's nothing to get too excited over, but yeah, is that the bear market low? I don't think so. And could that be a local low? Maybe. Let's see what the jobs data says in 31 minutes. Ripple. Oh, this is a very interesting story, and we'll be covering this more on our Sundays with Sensei. It is Ripple joins OpenUSD. A Visa and a MasterCard backed stablecoin picked the XRP ledger as a launch rail. So very, very, very interesting story here. This is why Circle dropped 13%. I wonder if it recovered at all. Circle, obviously the biggest stablecoin issuer, the stablecoin issuer of USDC, it dropped what was it, 16% yesterday, and it's been dropping about 30%, 40% since the last in the last few weeks. Yesterday, it dropped about 15, 13% because a new stablecoin is out and about, and we'll be covering this a bit more. OpenUSD, this is I think about 100 companies are backing this, and Ripple and the XRP ledger are playing a quite an important part in it. So we've got a mini story on it today, and we've got more coming on the weekend. The Jobs Day playbook, and that's our deep dive today. We've got a full playbook cheat sheet for you guys for premium newsletter members. And again, if you want to sign up and get it, you can still do it. You can go to today's newsletter, and there's a link in the live stream. There's a link in the description, and you can sign up for the premium plan. So yeah, 30 minutes to go. Let's ring the bell. I don't know why we rang the bell, but I think it's appropriate. 30 minutes to go until we get our jobs data. And it's not just jobs data. If we go back to what we're looking at, this is everything coming out today. Average hourly earnings month over month, average hourly earnings year over year, initial jobless claims, labor force participation. The jobs numbers we're looking at, non-farm payrolls June, the most important ones, consensus at 110. U6 underemployment rate and unemployment rate. All of the ones coming out in the next 30 minutes. You can see there's a 30-minute countdown now, so 30 minutes to go. Silver Days is loving the bell. Yeah, ring the bell, whatever. Let's just open the stock market ourselves. So yeah. Two big stories today. One is Meta announcing it will sell its spare AI computing power. That added 179 billion to its market value in a day. The same session, the companies that build and rent computing power fell hard. So you're looking at Nebius down 12%, CoreWeave down 10%, Nvidia down 2%. This is the message hiding inside both moves. When the biggest AI spenders start rent out excess capacity, computing power stops being scarce and starts being a commodity, and the profit shifts from companies selling the shovels to the platforms that already own them. Watch rental pricing at the specialist cloud firms. If it softens, the AI capex boom has found its ceiling. Very interesting. You would think that Meta, one of the biggest AI players, the amount of money they're putting into AI, you would think they need all their computing power. You'd think that it's the people selling the shovels that would be winning here, but actually, it may have flipped. They don't need it all. They want to rent it out. Great for them, I guess, if there's still demand for it, which there is. But not so good for the people that thought the spending is just going to continue and they're going to do it at all costs. They have enough capacity now to rent it. Great for Meta, maybe not great for the others. Also, pardon the pun, what's going on? What's going on, Rochelle Patel? I don't get it. Where is Martyn? Martyn will be, well, Martyn's never live at this time anyway. Martyn normally goes live in about half an hour, in about 27 minutes. But he's given me the, what's it called? The torch, the candle, to take it all the way to the opening bell. So I'll be live until the opening bell. I'll be doing an hour more than, I'll be going basically an hour into Martyn's show, but Martyn won't be live. I'll be sending you to the morning bell with Martyn. The June jobs report lands at 1:30 p.m. UK time. This is the second big story. Again, that's in 27 minutes time. Into the thinnest market of the year. Yeah, there's not much going on. The bond market is going to shut early today, and everything is closed tomorrow. Wall Street are heading to the beach right after this report. The Warm Up Act already wobbled, with ADP's private hiring count coming in at 98,000, its first sub 100,000 reading since March. A weak number is no longer simply good news for stocks. With inflation above 4% and the Fed leaning away from cuts, a soft print revives easing hopes, but a very soft one reads a growth scare. And a hot one puts rate rise straight back in play. Watch the 2-year yield first, not the equity open. Yeah, it's very, very fine line. You want it to be low so that we don't get rate hikes, but you don't want it to be low, so low that people are worried about recession. Fine line, we'll be on it. Martyn's in the chat saying he's always watching. Martyn's watching. Lovely to have Martyn here with us. I'll be with you on the bell. Yeah, Martyn will be with us on the bell. Okay, so the number that matters today is about $100 to $200 billion added to Meta's valuation because they're selling their spare AI computing power. Some of our top winners for today: MicroStrategy up 13% after unveiling a new digital credit capital framework that authorizes up to $2 billion in common and preferred stock buybacks, establishes a formal cash reserve, and lifts its STRC preferred dividend to 12%. And also Citi reaffirming a buy rating on the overhaul. The revamped capital plan has driven a sharp bounce off last week's lows. So essentially, they had to find a way to gain some confidence back. And they managed to do it. Let's see how long this one lasts. Robinhood is up 11% and it's rising after launching the public mainnet of Robinhood Chain, an AI-native Ethereum Layer 2 built for tokenized stock trading alongside a run of analyst price target increases that includes a fresh raise from Deutsche Bank. Analysts, if you're wondering why Robinhood went up, two things. People are raising their targets. Banks are raising their targets for Ethereum, for Robinhood, and also Robinhood has just launched its public mainnet of the tokenized stock trading on Ethereum. Palantir up 9%. A little bit of a rally after the US Army selected its Foundry platform as the data backbone for the next generation command and control program, a deal worth up to $10 billion. The company announced a partnership with NVIDIA to secure AI models for government agencies. Biggest loser today is Franklin Convey. Shares are sliding after leadership training company posed third quarter revenue and earnings that missed expectations and cut its full year revenue guidance, pointing to a large enterprise contract timing shift and a state education budget reduction and weakness across international markets. So those are our top stories. Again, those are just from snapshots. We've got those 5 stories plus a few more as more of a full story. Everything you need to know. Again, I don't like to overcrowd the newsletter, but I want to give you everything you need to know. And again, the 5 things you need to know, those 5 top stories, 2 paragraphs plus my thoughts. You can read through them at sensei.news. The link is in the description and pinned above. You can even sign up for free to read some of these stories most days. But again, if you want all the other perks and benefits, the deep dives, the cheat sheets, the trading view indicators, the portfolio challenges, the trading newsletters that are coming out shortly, the Sundays with Sensei, the XRP Weekly, the Net Worth Tracker, you can become a premium member. Those are our top stories. I will circle back to Mika. I've got a Mika special coming out in the newsletter probably later today. Mika went live yesterday, the deadline, and out of 2,000 sort of platforms, only 300 managed to stay live with the Mika regulation. So we'll come back over to Mika later, and we'll also come back to XRP. Now, shall we? Yeah, we'll come back to XRP. Let's go to the jobs cheat sheet now, because we're 23 minutes away from the big event. The big event. Can you guys let me know in the chat, yes or no? Are you enjoying the show? Are you enjoying the level of information? Is it too much? Is it too little? Is it bad information? Is it good information? Just let me know with a simple yes or no. Are you enjoying the show so far? Are you enjoying all the information you're getting in this morning show special with jobs report coming up? We will be going over the jobs report. I'll be telling you everything you need to know about it in the next 20 minutes. Then we'll go live to the jobs report. I'll tell you the numbers. I'll give you my thoughts. Then we can circle back for some Q&A until Martyn goes live on the bell. So we've got a lot to get through, but just let me know in the chat. Are you enjoying the show? Are you enjoying the information? Just let me know. Let's see what everyone's saying. Let's see. Oh God, there's two things going on at the same time. Martyn said something as well, so that's not going to work well, is it? Martyn said, put in the chat, yes, remember me saying live on the Meta show, I was going to 800. Martyn was right again. Wow, this is going to get confusing. Ignore Martyn's question. Focus on mine, yes or no? Don't say yes or no to Martyn's question. Forget about that for a second. Focus on me. Yes or no to my question I just asked you guys. Are you enjoying the show? Are you enjoying the level of information? Is it too much? Are you not enjoying it? Do you wish Martyn was live instead? Just say yes or no. Are you enjoying the show so far? And then we're going to go over to our jobs cheat sheet. If you have just tuned in, you can always scroll back, see what we were covering. We went through the market watch, we went through the top stories, spoke a little bit about Mika. We'll circle back to that, but we're getting ready for the jobs report. So please do hit the like button. If you have just tuned in, you haven't missed anything really about the jobs report. We'll cover it all again. Yes or no? Yes or no? Yes. I have 40k waiting for a Bitcoin crash. Way too much money in the bank. Pack openings. I hope you get the price you want. Maybe 40k could buy you a Bitcoin. We'll see. I was made redundant, so I'm waiting to trade in pack openings. I'm sorry to hear about that, but yeah, I hope things work out well for you. Human being Liz says, Bell at the bell, need more financial advice. No financial advice here. Garner says yes. As you can see, I'm just giving you information. No, I'm not telling you what to do. That's not what I do. Luck says yes. Bocker says yes. Yes, Sensei. A little slower. Talking would be much better. There's so much information I need to get out. Sorry, Liz. Sorry. Can you tell us what is good and what is bad? Yes, I can. But if you are a newsletter premium member, you'll be able to see it in the table. It's much clearer for you guys. It's the newsletter we send out, the cheat sheet before the main events. Love it, Sensei. Always deliver to your best. Thank you, Mr. T. Absolutely. Yes, both much. Paul says, heck yeah, enjoying the show. Luck says, yes, Martyn. Mark says, yes, we enjoy. Yes. Could we do the poppers again, though? Oh, God, the poppers. Are you talking about the charity event that we did last year? I'm still finding confetti everywhere. Slim Will UK says yes. Martyn was right again. God, are we saying yes to Martyn or yes to me? I'm so confused. I'm hoping for 49. Yes, enjoying. I'm hoping for 40k. I'm hoping for 40k. Yeah. It could be the lower end of what could occur. Yes, but again, I'd probably ladder in. Yes, I'm enjoying the show. Haven't seen you on YouTube as much. Says Sharpshooter. Yeah, a lot behind the scenes. You would have seen me in the newsletter and the Sunday shows and 1 or 2 events a week I've been doing. But yeah, we'll see. Maybe we do more. Pack opening says can finally buy 1 Bitcoin. That would be interesting. Yes, well laid out screen. Thanks. No worries, Mark. Yes, excellent work. Okay, now that I know I'm doing an amazing job, let's go on to the main event. Which is the cheat sheet. So today's jobs report, jobs day playbook. What? Special guest.
At Paulman to Richmond tipped $1.99 through Super Chat. When is your shirt going to be made? Smiley face emoji.
Thank you, Paul Man to Richmond. I have absolutely no idea what you're talking about, though. When is your shirt going to be made? When is your shirt? Someone help me out. He meant where is your shirt made from? He meant where is your shirt made from? That doesn't make sense either. Where is your shirt made from? What is your shirt made from? What do you mean? It looks Italian. The shirt? No, I don't know. It's from Reese. I don't know if you guys know about the brand. It's like a UK brand. Anyway, what country? I think they make their shirt. I don't know where Reese makes their shirts. Probably. God, do I have to check? I guess we got a super chat. Do I have to check where it's made? Let me see the label. Yeah, it's from Reese. Made in Turkey. There you go. Turkey. I hope that answers the question. Made in Turkey. He wants to see your shirt in the Martyn Village Market. All right. We're going off track. I don't know what's going on in the chat. We'll come back to this after the main event. We need to focus on the jobs report. So let's get back to the jobs playbook. So the 30-second brief. Let me read this for you. Everything lands at once today. The June jobs report has been pulled forward to today because the US markets are closed Friday for Independence Day. So today is the day we're going to get the jobs report. Normally, it would be on a Friday. It would actually be tomorrow. But a long weekend in the US, Wall Street going to the beach, and we're getting it today. Independence Day tomorrow, markets are shut. Tonight, the bond market will close early in the US. That's about 7 p.m. UK time, about 2 p.m. Eastern time. Which actually means there's probably thin liquidity, especially for the rest of the day. I would expect the Wall Street guys to take the day off after the jobs report. So maybe there'll be a little bit of liquidity this morning, but less than normal, but more than normal because it's a jobs report. So it probably averages out to a normal day in the morning and then low liquidity going into long weekend. Again, today is very important because we're not looking at rate cuts, we're looking at rate hikes. And inflation is at 3.4%, headlines about 4%, and now the market, as we showed you earlier, is pricing in a 34% chance that they're going to raise rates this month with Kevin Warsh. Kevin Warsh, second meeting, potentially raising rates. Wonder what Donald Trump will say. That would be interesting. But only if the jobs data is super strong and the inflation data is very high as well. That's the only way I see them raising rates. So the first item is jobs. What's it going to be like? Let's have a look. I don't know what's going on in the chat. What's going on? Let me go back to the chat. There's something weird going on in the chat. Martyn's copying and pasting. What is going on here? Sensei made by Reese. Reese? What's going on? Reese, R-E-I-S-S. Nobody cares your bloody shirt's from... Someone asked me, someone gave me a super chat and told me to look at the label. Someone said, is it Italian? Where is your shirt? I don't know what's going on. People ask about my shirt. He means, when will there be a shirt in the Martyn Lucas shop? Okay, yeah, great. A shirt. I don't know if there'll be a Sensei shirt in the Martyn Lucas shop. We'll have to see. Martyn being made personal shirt ideas on asking if you do the same. A shirt in this. Yeah, it depends. I like good quality. Yeah, we'll have to see. We'll have to see what we can do. We have to see where we can get these shirts. Maybe we have to make a partnership with Reese and see if they do a shirt. A silk dodgy Turkish shirt from Reese. No, what? Okay, what is going on? With autographs catching up 1.5x. Just before the data drops. Yeah, data's coming out, so we need to go back to data. Made me sound utter nonsense. Data is better than... Thanks. I said, do you like XLM? Yeah, I do like XLM. But again, not at these prices. A lot of the altcoins I'll just wait for the final capitulation to even think about. But yeah, XLM I'll think about it a little bit earlier. It's on my radar. So yeah, that's what is dropping. We've got okay, so 14 minutes to go. Everything is dropping at the same time. 1:30 p.m. UK time, 8:30 p.m. New York time, 9:30 p.m. Tokyo time. What is happening? Non-farm payrolls. The most important. The consensus is 110. The previous is 172. That is the main event. Then there's two other things that are important, which is the average hourly earnings month over month. Consensus is 0.3. Average hourly earnings 3.5. And then unemployment rate is always cool to look at. It's a little bit the next most important, 4.3%. And then these aren't too important. Initial jobless claims, we get that every week unless it's a big surprise. And then labour force participation and U6 unemployment. They're a little bit important, but they're just, at the end of the day, a little bit of seasoning. So one report, 7 numbers, 3 that matter: payrolls, wages, unemployment. The other 4 are seasoning. Do not react to the first headline that flashes. The market's real verdict usually comes once wages and revisions to prior months are digested. often 15 to 30 minutes in, you'll see where the market wants to head. Let's talk about the main one, non-farm payrolls. And let me remind you, this is where we're going to see the data first. It'll be before Bloomberg will cover it. It'll be right here. You have to look at the one that says non-farm payrolls. Right here, it's a little bit highlighted just above my head. It says 110,000 here. It'll come up with the actual number there. I'll announce the number. Then we'll go over to Bloomberg, which is will be
down
live.
This morning, but it was firing on all cylinders in yesterday's session.
Yeah, it was up more than 8% at one point because people see this as actually a positive revenue stream. A really interesting upgrade, or buy at least, on Meta. And a question here about their abandonment of their AI model.
Target is now $805, I think, from Bank of America on Meta, and they were up quite nicely yesterday. They are selling their AI power, essentially. Interesting. Maybe they don't need to spend as much on it, as well as making more money. Bullish for Meta, but is it bullish for the whole industry? We'll have to do a deep dive into that. Anyway, we'll go over to the Bloomberg, which will have Mike Mickey on for the jobs data. I will then give you my thoughts. Non-farm payrolls is the main event. You might ask, you might always hear about it, but you have no idea what it is. So if you don't, here is the explanation. Sometimes I have to remind myself. Non-farm payrolls is the monthly count of how many jobs in the US economy was added or lost. How many jobs in the US economy were added or lost? Taken from a survey of hundreds of thousands of businesses. So lots of data. Are there jobs being added to the US economy? Are they being lost? How much is being added? How much is being lost? But farm work is excluded, so it's non-farm, so not including farm work. Where the odd name comes from, non-farm payrolls, is because farm work is not excluded. A little bit self-explanatory, but there it is. It is the single most market-moving data release on the calendar because jobs are the engine of spending, and spending is the engine of both growth and inflation. So yeah, if you've got a job, you're going to spend money. And if you're spending money, it relates to inflation and growth. The setup. Consensus looks for about 110,000 jobs to be added in June. So that number that you saw just above my head, a little bit off my head now, but just above my head here, 110,000, the consensus, what the market's priced in. The market expects, the market is positioned for, the market is ready for 110,000 jobs to be added in June. Remember, we just hit July, this is for June. But that is actually already a sharp step down from May's surprisingly strong 172,000. So last month it was 172,000. This month we're expecting 110,000. That is already lower, but at least the market's ready for it. And some forecasters sit close to 100,000. The whisper leans hot. White House advisor Kevin Hassett has already teased another strong number. And a hot print is exactly what a hike-leaning Fed does not need handed to it. Essentially, if the jobs market's super strong, if the jobs market is hot and there's lots of jobs being added and there's no fear of recession, the Fed has the green light to raise rates. It has the green light to hold rates. There's no need for it to cut rates. The only reason they'll cut rates is if the economy's really strong and inflation's low and the jobs numbers are fairly low, and or jobs are too low that they need to cut rates to make sure the jobs market's not collapsing. So if we get really strong numbers, which what Kevin Hassett, which was one of the Fed chair nominees, has already sort of teased, if we get a strong number, 120, 130, 140, 170, essentially above 110, the higher we are above 110, the hotter that number is, the stronger that number is, then maybe the market will start expecting rate hikes a bit more and the market will sell off. So above 150,000, what does that mean for stocks? What does that mean for crypto? What does that mean for gold? What does that mean for dollar? Well, we've got the whole chart there. I'm not gonna go into it too much because again, a lot of this is for our premium members. But yeah, then we've got average hourly earnings. Just to give you a glimpse of it, essentially above 150,000, if we get that high, it's risk off. Hike odds will jump. Record high tech is the most exposed to higher rates. So the risk on assets won't perform well if we get above 150. If we get above 150, there'll be pressure in crypto. Bitcoin will probably lose 60,000 and we might start trending down again. Gold will also head down because higher rates raise the cost of holding a zero yield asset. It's not very good. I mean, if you've got higher rates, why would you hold gold when it's only gone up maybe 5% a year over time? It has no yield. It has no business. So if you've got free money from high rates, then you probably won't hold gold. That's the theory behind it anyway. Dollar, there's other reasons to hold gold, but that's why gold will go down on high jobs numbers. And then if you're looking at the dollar and yields, both will go up. July hike moves towards a coin flip. On the other side, if there's a big miss, 50,000 and below, a big miss, that'll be a whipsaw. First pop on the cut. So firstly, the market will pump. But then the market will get scared. Are they worried about growth? Because if there's a growth scare, if there's a recession fear, then again, we could head down again. So it will pop first, and then you need to see all the numbers. Will people start fearing for a recession? So again, if it's too low, the market won't like it. If it's somewhere like a miss between 50 and 90,000, about 50, 60,000, I would say, is where you'll probably get a bounce, a nice bounce in stocks, a nice bounce in crypto, a nice bounce in gold, and down on yields and the dollar. So we'll assess it when it comes out in 6 minutes time. Again, if you have just tuned in, please do hit the like button. Please do subscribe. The newsletter, you can grab it for free, sensei.news. If you want the premium newsletter with the cheat sheets, with the with exactly what will happen depending on what occurs, the explanations very clearly laid out. You can read in a few minutes and understand it all. Not only do you get the cheat sheets, you get the full daily newsletters 2 hours before the bell. You get the trading view indicators, the indicators I use to trade. Very, very simple. Don't overcomplicate your charts. It's backed up by academic research, plus the chart training course, 8 years of charting, put together in a 3-hour course. You'll learn everything you need to know about charting. And again, it's backed up by academic research, not like other people that try and sell you AI courses and all the rubbish out there. You also get the net worth tracker. You get the £5,000 portfolio challenge. You get the access to Discord. You get the training newsletters. You get the Sundays with Sensei, which is private shows. You get the one-on-one DM access, and plus a lot more. I'll put that link for the discount in the live chat. So 5 minutes away. Let's move on to the second biggest thing coming out today. So again, 5 minutes time, we're going to get all of this. Non-farm payrolls is the first thing to look at. The second thing to look at is average hourly earnings. So what's average hourly earnings all about in plain terms? Average hourly earnings tracks how fast pay packages are growing. It sounds like good news when wages rise, and for workers, it is good news. So this is what average hourly earnings. Are you earning more every hour? Are your pay packages going up? If it goes up, of course, it's good for you guys. But the market reads it differently. If wages are growing too fast, that will feed through to prices, and essentially it's an early inflation reading. So an early inflation reading hiding inside the jobs report. So essentially, if earnings are running too fast, like what's happening in Japan, then you know inflation is going to catch up, because if you're earning more, you're spending more. If you're spending more, prices go up, inflation goes up. So if average hourly earnings is rising too much, you're going to look at inflation rising as well. With the Fed leaning hawkish, again, it's leaning hawkish. We're not talking about rate cuts right now. We're talking about rate hikes. If with the Fed leaning hawkish, this number can overrule the payroll headline. So consensus is about 0.3% on the month over month. So when you're looking at this, consensus is at 0.3% month over month. You don't really need to focus on both the numbers, but essentially, if you just look at the month over month, it's at 0.3%. That's what the market's priced in. That's what we think is going to occur. With the yearly ticking up to 3.5 and 3.4%, wages reaccelerating while inflation already runs before 4%, is precisely the mix that gets hikes delivered. So if it gets above 0.4% month over month, not brilliant for rates because they'll have to raise rates because inflation will get out of control. If it's cool, it's supportive. So remember that. Higher, worse, lower, better. And then we also get the unemployment rate. If payrolls and wages disagree, wages win. So essentially, a 160,000 jobs number with a 0.2% wage growth is friendlier for the market than a 100,000 number and 0.5% numbers. The Fed's problem is inflation, not employment. And this is the line that, So essentially, let me just explain that. Just think about where we are right now. Inflation is high. We're expecting it to come down because oil's come down. Jobs are very strong. So if inflation's high, jobs are perfect. What are the Fed going to do? Well, the Fed are worried about inflation. If jobs are strong, they can raise rates or keep rates where they are, so they're going to do it. So right now, we're in a situation, if you look at the Fed Watch tool, by the end of December, we're expecting at least 1 rate hike, and even the market's pricing in potentially 4 rate hikes. So we're in a situation right now where the Fed wants to raise rates. Why? Because they can. Because the jobs market's strong and inflation's pretty high as well, so they kind of need to. If inflation goes down, then there's less of a need to raise rates. If the jobs market is weaker, then they don't want to raise rates because they don't want to feed into a weak jobs market and cause a recession. So what we need today, if you're bullish on risk on assets, which most people here want their crypto, their stocks and things to go up, what you want in that situation is average hourly earnings not to feed into inflation. So you want it to be pretty at least at consensus or below. And you want initial jobless claims, non-farm payroll to be weak. Because if it's weak, then they don't want to cut, then they don't want to raise rates. If you get both of those things, inflation will be coming down and rates will be coming down, or at least the chance of that. So if you're risk on, you want payrolls to be at consensus or below, and average hourly earnings at consensus or below. So we want low numbers today. Low numbers, just remember that. Low numbers is good. Let's see what happens. Let's have a quick look at unemployment rate. So what is it? It's the consensus for unemployment rate. The lower it is, the labor market's tightening. The higher it is, slack building faster than the hiring rate. So, yeah. I mean, we won't look into that much because it's not the most important right now. So initial jobless claims, participation rate, and unemployment rate, I wouldn't worry about either. We're really focused on non-farm payroll and also average hourly earnings. So it's refreshing now. We're going to go over to Bloomberg. Bloomberg are going to give their thoughts on it as well. If you want to catch up to the stream, you can always make sure you've got the live button pressed. If you've got the live button pressed, you'll be live up with me. I will have the numbers over here for you guys in about 9 seconds time. I'll also do my own analysis in the meantime. And let's go over to the breaking news now. Average hourly earnings have come in at consensus. Initial jobless claims there. Wow. Non-farm payrolls at 57,000. We're expecting a pump in the market. Let's see what happens.
Shaping up as follows. Your 10-year just short of 450 and up 2 basis points. With your jobs report, Mike McKee has more. Good morning, Mike.
Good morning, John. Numbers are just starting to come out, and it is a disappointment for this July 4th holiday weekend. 57,000 jobs is the total, and we saw last month's 172,000 revised down to 129,000, so a net revision of negative 74 over the 2 months. Change in private payrolls, 49,000. The forecast was for 107, and that was 120,000 the month before.
Look at that on gold.
It's been revised down.
I told you it's good for gold. Wow.
Manufacturing payrolls up a week, 3,000, but that's what was forecast. The average hourly earnings come in at 0.3, which bumps up the average hourly earnings on a year-over-year basis to 3.5%, still below the level of inflation, but it is a move in the right direction, I guess you could say. Average weekly hours, 34.3, same as in May and same as forecast. The unemployment rate, though, drops to 4.2% from 4.3%. That's about what the Fed thinks the natural rate of unemployment is. So overall, they're going to look at that instead of the job creation numbers and say that the labor market looks pretty steady. Participation rate 61.5 drops from 61.8. We also got one other number today that nobody's going to care about, and that is the initial jobless claims. They come in at 215,000, down 1,000 from last month's revised 216,000. So let me dig into where the jobs were created or not, and we'll see what's happening in the markets.
And Mike, you take a second look. Thank you, buddy. Appreciate it. Downside surprise on payrolls, 57k, the estimate 113 the previous month. Downward revision 129 from 172. In the market, you can predict what's going to happen here. Front end of the yield curve, 2-year yields come in. We drop, yields down across the curve. 2s at the moment down by 5 basis points to about 413. 10s down by a single basis point at 446. We'll get to some of that price action in just a moment. That unlocks this move in the equity market. Equity futures pushing higher by a third of 1% and just off session highs on the S&P. On the Nasdaq 100, a turnaround there, up by 0.5.
Okay, let me tell you what's gone on here then. So just a quick look at the numbers. Average hourly earnings came in at consensus, so let's ignore that. It's at consensus, it's what the market priced. And the only thing we can go off is non-farm payrolls at 57,000. So it wasn't super low, but it was in that range that we wanted, 57,000. 57,000. If we had low average hourly earnings, then we would have had a bit more of a pump. Unemployment rate came down a little bit, so that's taken away from the pump a little bit. So it is good if you're in high-risk assets to an extent. There is less jobs being created. So what does that mean? What are the numbers we got? Well, we'll go back to Bloomberg in a second, but let me tell you what's happened. So non-farm payrolls came in at 57,000 for June. Consensus was 110,000, so that's roughly half of what was expected. On top of that, May was revised from 172,000 to 129,000. So remember that big number I told you about earlier in May? That's actually come down 50,000. So that's 43,000 jobs that were previously reported that now have been removed. Taken together, hiring is much weaker than the market believed an hour ago. So what we know now, compared to what we didn't know about 5 minutes ago, is the market was wrong. Hiring is weaker than what we thought 5 minutes ago. Now we've got the hard data. And now we've got the hard data, we can now see what the Fed's going to do, especially when we put it together with our inflation data. So that's point number one. Number two is the unemployment rate fell to 4.2% against 4.3% expected. That sounds strong, but looking at participation, it dropped from 61.8% to 61.5%. The rate fell because fewer people are looking for work, not because more people found jobs. And the U6 underemployment also eased from 7.9 to 8.1. Average hourly earnings were exactly in line, 0.3% on the month, and the yearly rate ticked up to 3.5 from 3.4%. Wage growth is still accelerating slowly, so the report is soft on jobs but not as soft on pay. Jobless claims were about 215,000, slightly better than the forecast. So let me tell you what this actually means. If you are still with us, hit the like button. I'm going to tell you exactly what this means, and then I'm going to give you my final thoughts. Then we're going to do your Q&A. Then we're going to go back to Bloomberg, and we might look at crypto as well. So please do hit that like button. Subscribe if you haven't done so already. Please do consider signing up to newsletter. It is free. If you want the free plan, which you get the daily newsletter, the daily stories 2 hours before the opening bell, and if you want the full premium plan with the chart training course, the trading view indicators, the £5,000 trading challenge, the net worth tracker, the Sundays with Sensei, Q&A sessions, chart sessions, plus a lot more, which I've probably forgotten. The link is in the pinned in the live chat. I'm also going to just chuck it in the live chat right now. So here we go. So what does this mean? Before this report, markets priced in about a 34% chance of a July rate hike. A 57,000 payrolls print with a 43,000 downwards revision to May takes most of that away. The case for a rate hike rested on a labour market that was holding up, and this report says it's not. Expect rate hike odds to fall and rate cut discussion to return. So that's what we were looking for. We'll go back to the market, see how it's reacting. Remember, I told you, let's give it 10-15 minutes, and then we'll see where the market really wants to go. Gold shot up. Crypto went up slightly, sold off a little bit more. Well, I'm not looking at it right now. I'll come back to it in a second. But yeah, we are expecting rate hike odds to drop now. The usual reaction to that: Treasury yields fall from 4.48%. The dollar weakens. That is supportive for stocks, gold, and crypto. We can expect Bitcoin to go up more. The complication is that wages at 3.5 and rising with inflation above 4%. The Fed cannot simply pivot to cuts either. So this leaves them on a hold rather than easing. Yeah, we need to look at that as well. The caveat before anyone calls this a rally signal, 57,000 with a falling participation rate is genuinely a weak report. And the next couple prints, if the next couple prints look like this one, the conversation moves from a rate relief to recession. Also worth noting, Fed dailies. Yeah, okay. So I'm just looking at some of that data that was coming into me, plus some of my own thoughts, and we'll come back to Bloomberg for a second, and then I'll give you my final take. I think we've got Mike Mickey back on Bloomberg. Let me just see if we've just... So yeah, we've got Mike Mickey here. Let me go to him for a second. Okay. So if you have just tuned in, jobs report came out. Jobs report came out weaker than expected. Average hourly earnings stayed at consensus. Essentially what that means, if its jobs are weaker, the Fed don't want to raise rates because that could put the jobs market in danger. In fact, they might want to reduce rates because they don't want the jobs market to fall into recession. So we got the data. This is what the data was. I'm going to give you some more context in a second. This is what the data was. Let me just show you. Average hourly earnings at consensus. And then the other big one was non-farm payrolls. Previously is now been revised down from 170 to 129, so less jobs last time round than expected. And this time round, about 50,000 jobs less. So it was expected 110. We got 57,000. Less jobs created, meaning the labor market is in some sort of danger, meaning they don't want to raise rates. Otherwise, that could cause the labor market to go down. So in fact, if they're not raising rates, that could be good for the market. Let's go back to Mike Mickey. Let's see if he has any other information for us.
Well, right now I'm looking at the labor force fell by 720,000, which accounts for the drop in the participation rate. That's a big number. We had an increase of 83,000 in the month of May. Employment fell by 507,000 in the household survey, while unemployment fell by 213,000. So we have a slight decline, largely because of the size of the labor force falling in the unemployment rate. And it looks like on first glance, most of the jobs that were created were in the healthcare and social services categories. There is an increase in business services, which is the sort of temporary help, and that is usually a sign of a kind of a rebound. But here's the interesting thing. We lost like 61,000 jobs in leisure and hospitality. First, you got to figure in the seasonal effects, but there was an expectation we might see a big jump because of the World Cup, but it doesn't seem to have come through in this month.
Mike McKee, thank you, buddy. We'll come back to you in a few minutes' time. As anticipated, with a number like that, you don't price out a rate hike per se, you push it back. And that's what we're doing right now with rate pricing, pushing it back to December. Previously, we were baking in something around October. You look at these numbers, expecting a family fight at the end of this month at the Federal Reserve. Does that family fight get a little bit less, let's say, testy at the end of this month with a number like that?
This does not suggest there's urgency to make a move in any which way, because ultimately this doesn't necessarily speak to incredible weakness, but it also doesn't speak to some sort of incredible expansion. It kind of goes to what Neil Richardson was saying, which is you saw the May print really highlight the World Cup jobs created. Maybe this is the June report taking them back after the infrastructure was laid for the World Cup games. You look at this, it doesn't give you really any clear signal. So you're right. It doesn't necessarily increase the urgency and takes July, pushes it further off the table.
If you're just tuning in, welcome to the programme. So we got the jobs number just moments ago, came at 57K. The estimate in our survey was 113. The previous number revised down. The unemployment rate, for a bunch of reasons, we'll spend some time on that, dropped back from 4.3% to 4.2. With us around the table, Stephanie Roth of Wolf Research. Stephanie, good morning.
Good morning.
What would you put weight on this morning looking at this report?
Yeah, I mean, I think the main message from the report is payrolls have been overstated to some extent in the recent prints. We're sitting in a labor market that's largely in balance. The unemployment rate, yes, it ticked down, but realistically, you know, the household and the establishment surveys have been telling you slightly different signals. It kind of makes sense. It tells you the labor market is fine. There's no real concern, certainly no urgency for the Fed to be hiking, and that buys them time. The longer that they have to buy time, by that point, inflation will be slowing down a bit, and that will probably allow them to stay on hold.
The chairman used a word to describe this particular jobs market. He said it was steady. Would you call it steady, this labour market?
I think that's exactly right. And I mean, there's been a lot of volatility in the actual data itself. It seemed odd, the extent of which payrolls had been running significantly above anyone's estimates of break-evens for many months, and you weren't really seeing wages pick up. You weren't.
Oh yeah, this is where Bloomberg just comes in and speaks a little bit of nonsense just to make it a bigger deal than it is. It's very simple, guys. We've got the data, now we wait for inflation data. What we saw, what we were looking at was the Fed watch tool. This is our most accurate way of thinking what the market is priced in for rate hikes. Because all of this comes back down to, firstly, is the market going to go up? Is the risk on going to go up? Is crypto going to go up? Or is it going to go down? Is gold and silver going to go up or down? Is defense going to go up or down? That's essentially what we want to figure out and where we are in the cycle. Are we going to go to raise rates? Are we going to go to cut rates? Is a recession coming up? Is it not? That's all we want to figure out, and it all comes back down to this data. And it all kind of come back to rate hikes and rate cuts. We looked at the Fed watch tool earlier today before the data came out. The market's pricing in theory, one rate hike. It could some of the market's pricing in 4 rate cuts, some of it's pricing in 2 rate hikes, 4 rate hikes or 2 rate hikes. But by December, by the end of this year, if you're looking at this chart here, there's a 39% chance. And again, this hasn't refreshed since the data. I don't think it would have. Let me refresh it. But essentially, before the data, it was pricing in a 39% chance of a rate hike by December. Now it's pricing in around a 42% chance. We'll wait for that number to settle down a little bit. So I would expect after this one data piece, again, this is just one piece of data, what we got was jobs lower than expected. If you've got jobs lower than expected, if jobs are lower, then the Fed don't have as much room to raise rates. The only way the Fed can raise rates, or they want to raise rates, or they have the room to raise rates without any consequence, is if the jobs market's super strong, and they have to because of something like inflation. Right now, before this report, the jobs data was very strong, and inflation was pretty high. So also, there's a small caveat that inflation's heading down, so there might have been a reason why they don't need to raise rates too much. If, for example, the war was going on and oil was at 120, then we'll be in a completely different situation where I would be saying they need to raise rates, they're going to raise rates this month. But the war is pretty much over, oil was pretty much down to before war time. So inflation looks high, but that's coming down. It's still pretty high though. So jobs market strong, inflation's higher than you want. The solution is the Fed will come in with raising rates because the jobs market's strong. It's not going to affect it. The inflation's slightly high. They will come in with hiking the rates. That brings inflation down. It also does damage the jobs market slightly. But today we got some information that showed us average hourly earnings. Inflation's not going to go up because of that, really. That wasn't a surprise towards the upside. It wasn't a surprise to the downside. So we don't have much data from average hourly earnings. But the jobs data today showed us actually this is lower than expected. The jobs market might be in danger, and maybe we don't want to raise rates yet, because if the jobs market is in danger, if we raise rates, we might be in a situation in a few months from now that the jobs market might be showing us, oh, we might be going into recession, or maybe it's very weak. So after today's data, we can say that the chance of a rate hike has gone down slightly. And what they're probably going to do is just keep rates where they are until we get more data. And the next data we're going to get, and I hope you tune in for it with me, is inflation data. When is that data? I have no idea. It's not this week. It might be next week. Because if inflation data is also much lower than expected, then forget about rate hikes. I don't think there's going to be rate hikes. Worst case scenario, 1 rate hike. But I'm really not. This year, all I've said is no rate hikes, no rate cuts. And I think that's going to happen. But it depends on inflation, because if inflation comes down lower than expected, then inflation's is coming under control. Jobs are looking a bit scary and you don't want to hike rates. They're just going to hold rates where they are. If inflation is suddenly much higher and it's not trending down, which I expect it to because of oil, then maybe we can still have rate hikes on the cards. But the next thing we look at is inflation. Now, when the hell is inflation? Let's have a look. Is it next week? Let's have a look at this calendar that it will tell us. Inflation. Next week, we've got the FOMC minutes. That will give us a lot of information. I'll be live for that. No inflation data next week, but we've got FOMC minutes. That will tell us a lot about what the Fed were thinking under Kevin Warsh. We'll look at that. The week after, then it's CPI. So on July the 14th, we'll have CPI. On July the 15th, we'll have PPI. And then PCE will probably be the week after. So we'll wait. Don't panic. This data will come out before the FOMC. Do we have any expectations yet? No consensus yet on CPI. But previously, CPI was 4.2. I expect that to come down. I expect that to trend down. It looks like we don't need rate hike. It looks bullish for the market. Let's see how the market reacted. Gold, as I said, it'll be good for gold if jobs data is lower than expected. Gold jumped. Wow, well, look at that. I mean, gold jumped 2% on that news. 2% in minutes. Silver jumped probably similar amounts. Silver jumped. I'll come on to your comments in a second. Silver jumped 3% on that news. I expect Bitcoin would have gone up slightly. Yeah, not as much as you might hope. There is a lot of weakness in crypto at the moment. It didn't go down. It went up 0.5%. Ethereum went up slightly. XRP went up slightly, selling off now. Let's look at the S&P 500. The S&P 500, yeah, the S&P 500 liked. The S&P 500 went up 0.34%. The Nasdaq certainly went up. Oil is down to levels before the Iran war, or the US war, or whatever you want to call it. Someone got angry at me the other day. I said the Iran war, and they said, "Why do you keep calling it the Iran war? Iran didn't start the war. You should call it the US war." I said, I don't know. Iran war, US war, whatever you want to call it, before the war. The US and bonds are down. Yeah, so it's as expected, slightly bullish for the market. It could have been more bullish if average hourly earnings were lower, because that would have indicated inflation was coming lower. Slightly bullish for the market. Let's wait for inflation. Don't be too quick to call for rate hikes, and certainly don't be too quick to call for rate cuts. I think we're going to hold for the rest of the year. Oh my God, we've got a super chat.
Martyn Lucas investor tipped $9.99 through super chat. Martyn's thoughts. Report rubbish. Media trying to spin nonsense. As you know, I'm defensive after freezing the market this year. $250,000 now in bills.
Thank you, Martyn. Let me read that again. Let me go over here and put it on the screen. I love it. We've just got a super chat for Martyn. Thank you very much. Let me go. Where is it? There it is. Guys, anyone can do a super chat. I can't believe Martyn's done the highest super chat today. $9.99. If you do a super chat, it reads it out on the screen. I will come to your comments and questions in a second, but I will prioritize the super chats. Let me see what Martyn said. So Martyn's thoughts. Report rubbish. Media try to spin nonsense. As you know, I'm defensive after 3 years. 3xing the market this year. $250,000 now in T-bills. Set top lots on Bitcoin. See trades in Discord. Yes, check out Martyn's trades on Discord. He's just told you, he's just done an update there. So if you want to join Discord, the link's in the description. You can join Discord and you can see Martyn's trades. 3x the market this year. 250,000 now in T-bills. Martyn's thoughts. Report rubbish. Media trying to spin nonsense. Am I part of the media that's trying to spin nonsense? I don't know. Maybe I'm part of the nonsense. We'll see. Labour market is fine as gas. Yeah, no. Labour market is starting to break. But if it only breaks a little bit, that's good for the market. If it breaks a lot, obviously that's a recession. But it's slightly bullish on the day after this report. Again, we can have the debate: are the numbers real? Are they fake? I don't know. At the end of the day, we need to go off what the numbers are in front of us, because that's what the market reacts to. Let me go through some of these questions. If you do have a question, please do hit the like button. Hit the like button first, and then post your question in the live chat. Subscribe if you haven't done so already. And let me just show you again. If you want the newsletter, these are some of the things you get. You get the daily premium briefings and deep dives. Again, if you are investing in the market, you need a newsletter. You don't need 50,000 newsletters. You don't need 50,000 subscriptions. I used to have about 10. I mean, I still do because I look at all the news. But I used to have 10 subscriptions to figure out all the news. Now I have the subscription so I can relay to you what the most important is, because it's 99% is stuff you don't need to know. Only 1% is important, and that 1%, I spend the thousands on news, so you don't have to. So out of all the news reports, only 5 are important, maybe 6 or 7, and we put them into the daily briefing. So every day, 2 hours before the US opening bell, the most important opening bell in the world, we send out a newsletter. 5 top stories, everything you need to know, and you actually can get most of that for free by signing up. The link is in the live chat. You can sign up for free. And then if you want the deep dives, the charts of the day, then you also get that in the daily report, but that's only for the premium members. You also get macro event cheat sheets anytime we have an inflation report, a jobs report, an FOMC, big earnings. I will send you out a cheat sheet in plain English, really allowing you to understand what it is you're going into, what it is you need to look out for, and what it all means when the data comes out. You get that. You also get the chart training course. Again, this took me 8 years to really build because it took me 8 years of research, trying out other people's courses, really understanding what happens, and then reversing back to the roots of academic research. And we did the academic research. We put the chart course together. It's 3 hours. If you spend 3 hours, you learn what I did in eight years. And you get the private premium trading view indicators, which you guys have been raving about. The amount of reviews I've got about the trading view indicators, it seems to be the most popular part. You'll get access to that. Just send me a DM and I'll give you access to it. You get the £5,000 portfolio challenge, an update coming either today or tomorrow on that, an XRP update actually. A lot of people say, how do I buy XRP and how do I get exposure to Ripple and XRP? Well, I'll tell you tomorrow. There's a portfolio tracker and financial control suites app. So you essentially get a net worth tracker. There's a private community access on Discord, one-on-one DM access. You get the Sundays with Sensei, the chart requests, all of that sort of stuff you will get access to. And right now, I think there's 3 people can get it. It's a 25% discount off the yearly plan. So, excuse me, you can do that or get the monthly plan. You can click on the link or get the free plan, but only 3 people can get the 25% off. The link is in the live chat. Please do consider it. Tony Young says, recommend the newsletter very highly. Thank you so much. I appreciate it. Thank you, Tony Young. I appreciate that comment. Let me go back to your comments because I want to react to your questions as well. So if I go to this, and then what else do we need to talk about? Oh yeah, we need to talk about Mika, XRP, and then we'll be going over to Martyn in about half an hour for the opening bell. So yeah, let's see how the market reacts to this jobs news as well. Let me go over to this screen. It's probably better. Oh, I am on that screen. So Martyn has been wrong for nearly a year now. What's going on? How's Martyn been wrong? Have you seen his portfolio? I think that's sarcasm. Mark says, good morning all. I highly recommend the Sensei newsletter. Thank you, Mark. I really do appreciate that. That's really kind. I mean, when someone recommends something, I feel like it's such a great compliment because it's not me saying it, it's other people. Mark Skades, thank you very much. Ricardo says, this is fake news. Trump said there's no inflation and the economy is booming. Yeah, well, there's definitely inflation. Songs for Space says, if oil stops flowing, though, we are in big trouble. Temporary supply glut from shops coming through. Yeah, I mean, I think oil is going to go back up, but I don't. Unless the war restarts in quite an extreme extent, I think $120. Forget about it for now. $100, forget about. But there is an argument to be made. Worth buying some oil. I mean, everything's not great. Oil was trending up before this anyway. We're at levels before the Iran war. I mean, I think oil will trend slowly back up. It'll find a bottom or capitulate. It's probably maybe already done that. And then maybe just head up slowly. Nothing too concerning, but slowly. We're probably just going to be in a situation where inflation is just not going to come back down to 2% for 2 more years or 3 more years. And then we're going to have inflation above target for 8 years in a row, and that will cause its own problems. If oil stops flowing through, we are in big, because I think inflation's peaked, but I'm not saying inflation is in a good situation. I think inflation is going to stay above 2% for a while. Again, remember, it was tariffs first, then it was the oil shock, then it was the tariffs passing through. What else was there? All sorts. I've forgotten what's happened over the last, and then obviously COVID and all of that. Recommend the newsletter very highly. Thank you, Tony Young. Martyn says, Steve, I've been wrong. I've been beating the market 3 years in a row. Watch the audience will now confirm with a yes to reveal that it's troll lying in the chat. Sensei Martyn always right with the fact. Thank you, Starlight Matrix. Gas expected to stay above $4 a gallon end of year. 105,000 shared everything live to facts. Sensei facts. Yes. Oh, good. Good morning, Banana Head, says Ricardo. Songs today says yes. It's a very good financial advice. Stop saying financial advice. There is no financial advice in the newsletter. Yes, answering to Martyn, says Silver. Okay, did I miss any other comments? Let's go non-farm payroll and high on unemployment rate will be awesome. Yeah, it was lower on unemployment rate, which is why we didn't get a massive boom. It was also not as low. It was at consensus for average hourly earnings, but non-farm payroll was enough to move the market up. Dow 60,000. Yeah, nice. Dow. We hit 60. Yeah, it's like all-time highs in 60,000. We hit it last week as well. What is it? Dow Jones. I just never. I never really look at the Dow Jones. Yeah, so I don't have it for you. I wonder what the ticker symbol is. Dow Jones. I should know that, but I don't. It's because I've never invested in the Dow Jones or looked at the Dow Jones. Not to say it's a bad investment, but it's not ever been on the top of my list. XRP is still heading up. Ethereum's up 3.4%. Silver is had its initial boom, now selling off. I think silver would trend back down to. It depends. If it breaks $60, I think it'll trend down to about 55 and then 50. Gold at that's going to trend down as well. Yeah, you get the initial pump and then a sell off and then a continuation. I think so. The S&P 500 might have a little bit of a sell off and then continue up. I mean, at the end of the day, it is good news for risk on assets, so we'll see what happens. But it's not the best news. So if something else comes out, then it can reverse the gains. But I would expect the market to continue towards the upside today. I do have a lot of stocks I'm looking at. Bullish, Gemini, Now, CRM, Adobe. Oh my God, Adobe, that was a good trade. I sent this out to all newsletter members at $194. Now it's at $214. Oh my God, that's quite good in, what's that? 7 days, 11%. Congratulations, newsletter members. Alibaba, SMR, something we're looking at, Circle, URA. Yeah, I'm going to put out a trading post. I'm going to put out my views on some of these stocks I've been tracking now and saying if I'm interested in buying or not. Again, it's not financial advice, but it's some stocks I've been tracking, some certain views. As I said, if you guys are interested in Ripple and XRP, tomorrow, let me just put the XRP on the chat in case anyone comes back later. So we're done with the live report, so I can turn that off. Let's just talk about XRP and Mika for a second. So I know a lot of people have been asking me about how do I get exposure to XRP? How do I get exposure to Ripple in the stock market, especially in the UK market? Let me get an idea. Is that something you guys are interested in? Yes or no? Do you want to know how to get exposure to Ripple, the stock, XRP, in the stock market? Yes or no? Let me just see if we've got the right audience for this to speak about. Yes or no? Speed says, we need more of your trade, Sensei. Thank you on the heads up on Adobe. Speed clips, no worries. Oh, cool. Do you do clipping? Speed clips. Do you clip people's content? I wanted to speak to someone who does that. Speed clips. Are you a member of the newsletter and a clipper? I mean, this could get very interesting, Speed clips. Yes or no? So let me know. But yeah, guys, answer the question. Are you guys interested in how to get exposure to Ripple and XRP in the stock market? Yes or no? Alibaba Holdings, fantastic buy price. Yeah, we're going to be looking at that as well in the trading post. I subscribe to your Sensei newsletter for his amazing... Why does he stop saying that? I don't do financial advice. Beginning of third quarter, yesterday, institutional inflowed into energy, healthcare, and industrial out of chips. Yeah, we've got a healthcare pie in the newsletter. Let's see if that starts performing. I'm staying out of oil, too much volatility up and down, says Stephen. Thank you. This is Stephen, one of the biggest oil investors out there. Thank you. Okay, so do you guys want to know about how to invest in XRP and Ripple in the stock market? Mistron says yes. Torb says no. Armand says yes. Ricardo says yes. Armand says absolutely. Brett says yes. Lula Lula AI Dream says yes. Burton says yes. Toyota have confirmed their $250 million investment in Joby before year end. Thank you, DJ Haynes. I'm sure Baz will talk about that in his EV Toll Daily. Lux says yes. Paul Man says yes. Stephen, I love it. The only person who says no, not for me. I love it. Stephen's sticking to what he knows best. So you guys have said yes. Interesting. So I will do a lot more work on that today then. I will be releasing then, now I've got even more confirmation. I thought you guys would, but even more confirmation now. I'll be releasing tomorrow, when the markets are closed, ready for the open on Monday, an XRP pie. So if you guys are in the UK, you'll have access to trading 212 Pi. If you're around the world, then you can see the investments anyway and create your own Pi on whatever exchange you use. I'll be looking at how to get maximum exposure to Ripple and XRP in the current climate, because again, Ripple is very hard to buy, but there are ways around it. There's ways to get exposure. How am I going to do it? Well, you need to be a newsletter member. This is only going out to the members. Yes, we give away lots of things for free in the newsletter. A lot of the top stories every day, and you guys are getting spoiled with the free content. But the stuff like the XRP Pi, I'll release tomorrow for the newsletter members a full analysis into the companies that give you exposure to XRP and Ripple. It will be ISA friendly. Again, it's not financial advice, but if you're in the UK, it will be ISA friendly. Because again, at the end of the day, I am in the UK and I want to do it as well. So I'm going to make it ISA friendly. But yeah, I'll release it then. I've already started working. I've spent about 2 or 3 weeks already researching it. I wonder if I can give you any. Yeah, I won't give you too much. I'll explain the whole thing in the newsletter. I'll give you the pie. I'll give you the stocks, and that'll come out tomorrow. If you do want it, then there you go. The link, 25% off the annual plan. You can sign up and you'll get it. I think it works out to about $12, $13 a month if you go for the annual plan. I mean, the amount of content you get in the newsletter is ridiculous. I know the price might seem high initially. Well, everything's relative. To some people, it seem really cheap, but it is over $100 for the year. So I guess that is high to some extent. But when you realize how much content you get, the amount of perks, and especially if you utilize the perks, I mean, the chart training course, that in itself is worth $500, $1,000 people pay. The trading view indicators, that itself is worth $300. The daily newsletter, that itself is worth, I mean, Bloomberg charged $300 for their newsletter every day. And again, I take my sources from everywhere, so you get better than Bloomberg. Just themselves, just those things are over $1,000. So when you work it out to be about $13 a month, then you can really see the amount of how much it's worth. So you guys, if you haven't signed up to premium yet, if you're on the monthly, you might want to sign up to premium. If you're a Discord member, go into Discord and unlock sensei.news for the discount there as well. But yeah, okay. At least I now know you guys want it, so I will give it to you guys. So make sure you're a Sensei Premium member before it drops tomorrow. Again, if you do join later, you can always go into the archive and find it. Thanks for the heads up on Adobe. No worries. Let's go back. And also, today, I'll be releasing Mika. Mika has just come out in the UK. No, what do I mean? Mika has just been released yesterday. Is the full first day of Mika, the final part of Mika where the exchanges had to comply. And it is interesting. Not many survived. I'll be releasing a full newsletter on that. Someone requested that, a newsletter member. Who was it who requested it? Let me see if they're in the chat now. I was going to probably do it anyway, but when a member requests something, I have to do it. So who was the member? Let me see if I remember. Guys, remember, if you're a premium member, you unlock a certain part on Discord. So if you're a premium member and you're not seeing the Sensei side, just open a ticket. I'll give you access to your trading view indicators and access to Discord as well. So who was it I asked? Oh, Chief Hillbill. Chief Hillbill, are you in the chat? You'll enjoy this. You are asked, what's your thoughts on Mika? Yeah. So Mika, I'm going to give you my full thoughts and actually what it all means later today. That's going to come out as a newsletter. So you guys keep an eye out for that as well. So yeah, I'll leave my thoughts for when that newsletter comes out. I just want to let you guys know to a little bit of a heads up. It is coming out later today, the whole Mika newsletter. Oh, 4541 Brian. Brian, you're going to look forward to this then. I've done it for you and probably for everyone else. And a little bit for me, so I can get up to date with it as well. So where were you? Where's the chat? 4541 Brian, you're Hillbill. So yeah, that'll come out for you. So keep an eye out for that. When will it come out? Maybe in 4 or 5 hours, something like that. And then tomorrow the XRP, Sunday with Sensei. If you guys haven't been tuning into Sundays with Sensei, we start off with an XRP newsletter that comes out. If you're a newsletter member, you'll get that. XRP newsletter, XRP show. Then we'll go over to a private event for Discord members and newsletter members. And then again, newsletter and premium members will get priority with all their comments answered. We always allow them to comment in the private Discord. So if we're too busy, we'll just focus on the premium members. But again, everyone is welcome there, Discord members and premium members. 4154541, Brian says, cheers, mate. No worries at all. You're a newsletter member, and my job is to provide the best service. So we do. Okay, so what's the time? It is 2:07 UK time. That means in 23 minutes time, Martyn will be live with the opening bell. Let me see if we've got a live show set up. Let me have a look. Guys, if you have any questions, throw them in the chat. I'm happy to answer them. We can go back to a market watch as well. Let me see, do we have a... Martyn will be live with the opening bell. We'll have another look at the stocks in a second. No, Martyn will set up a stream shortly. So, open that, go there. Okay, let's have a look at the market. XRP now up 4%, $1. Now we're up nearly 10% on our $1 buy on XRP. Look at that. Look at that. Feel sorry for anyone who didn't buy XRP at $1. Even though I think it's probably going to go lower. I mean, $1 is a nice psychological level which you expect to bounce, and we're getting that bounce to the tune of about 10%. So congratulations, XRP holders. Ethereum up 3.43%, not too interesting. Silver coming up to resistance at $61. Let's see if it breaks that, then it can get interesting for silver as well. But let's see. Bitcoin back above 60,000. If it holds it, that can be interesting. Gold at 4,100. No real trade there. I mean, the last trade was at about $4,000 as a buy. Sprouty Lane, I love it. Sproutberry Lane. Oh God, you know that's a comment I like. Let me show you. Sproutberry Lane says, liking the new layout, old school Ben Armstrong. Ben Armstrong, love it. That's where the inspiration was from. Actually, I can't believe you noticed it. Those were the days, weren't they, Sproutberry? Yeah, every day tuning into Ben Armstrong, just looking at the portfolio go up 50%, then another 20%, then 50%, and yeah, it was always the thing that was on. Though 2021, 2022, or I think it was 2021. Every day you'd look at your portfolio, the market would be up another 20%, 30%, and then it was always Ben Armstrong with his. Yeah, it was actually the inspiration. I did like his layout because you could see where everything was. So I can't believe you noticed it. Sproutberry Lane, liking the new layout, old school Ben Armstrong. Yeah, there it is. That was the inspiration behind it. I can't believe you figured that out. Rish Patel saying BitBoy Crypto. Yeah, BitBoy Crypto. Back when it was BitBoy Crypto. Before they took him down. What's the channel called now? Crypto. I mean, no one tunes into it anymore. I mean, it's TJ, isn't it? And that guy's a bit weird. They just talk a lot of nonsense. Ben Armstrong was at least a little bit funny, and he had a take. What was it? What's it called now? Crypto something. BitBoy Crypto. So we're going off track a little bit now. Is BitBoy out of jail? Is he back in jail? I don't know. Where is the actual? What's it called now? Crypto something. Crypto? No, I don't know. Oh, Discover Crypto. Does anyone actually watch Discover Crypto? What do they actually do? Have a look. Let me go over to this for a second. Let's just do a little bit of stalking. We've got some time to play with. Martyn's not live yet. Discover Crypto. Yeah, they're not. Let's see. It's just TJ, isn't it? Look at this. There it is. Yeah, they're not doing. Yeah, I don't think their content's actually great. I looked at a few things. It's just a whole bunch of nonsense. It's a lot of AI now as well. I mean, that's why this channel's great. We just don't do AI. And that's why Ben Armstrong back in the day was good. He would just say as it is. Now they're just now it's just boring, and they just a lot of AI is in their channel. That's why they're not doing well. They shouldn't have done that to Ben Armstrong. Sproutberry Lane, Rish Patel, Bitboy Crypto. You need to rant a bit more. Rant more to the channel. The Ben spirit. Yeah, you need to rant. I need to rant more. Yeah, he used to have his rants. He's gone into a mental institution. Oh God, he's gone into a mental institution now. I thought he came out. Is he back in? Sensei, how strong is Solana against Bitcoin and XRP? How strong is Solana? Let's have a look. But it's hard to look at Solana because remember, Solana bear market lows were ridiculous. It's not the same way of looking at it because Solana was tied up in the whole FTX situation, so it fell to $5. We can't look at it the same way. You have to take into account what happened in the previous bear market. So if you looked at it the same way we were looking earlier, how strong is XRP and Ethereum against Bitcoin? If you look at it the same way, you would look at Solana and go, wow, it's so strong. It would have to drop 90% to get back to lows. XRP and Bitcoin would have to drop 70%. But Solana went down to $5 because of the capitulation with FTX and the fears that it was going to zero like Luna. So that was the issue last time around. So it's not the same way you can look at it. The only other way you can look at it is sort of Solana versus Bitcoin, but then also not look at the last cycle. So it's hard to say. I mean, where are you from 2024? 56%. I mean, let's look at it from that. So March to now, Solana is down 56. That was March of 2024. And it was March of 2024, 56. March of 2024, 56. March of 2024, 56. Is that right? March of 2024. In that case, it's a lot weaker. Yeah, I mean, it will take. Yeah, if you're looking at from March 2024, it's a lot weaker than XRP. It's hard to say. I would have to sit down and take a second with the charts, and just do a few overlays. But if we just look at this, Solana, we'll find a way. Solana USD. Let's just do it the simple way. Solana USD. Let's add a chart. XRP USD. And then let's add Bitcoin USD. We'll just look at it from the highs. So Solana from its highs, we just have to look at it a different way because we can't do the same thing looking at the last high. So Solana's down 72%. XRP is down 72%. And I think Bitcoin's down the same. No, Bitcoin's down 54%. So yeah, Solana's in line with XRP. Bitcoin is still king. Bitcoin's still performing better than all of them. XRP performed better in the bull market than Bitcoin, hence why it's the same distance away from its bear market lows. So that's one good thing for XRP. But in terms of how they've performed, Solana's down the same as XRP, but Bitcoin's down the least. So Solana, if you're down the same as XRP and not too much more than Bitcoin, then that's actually a good sign, because if you look at any other altcoin, I mean, if you just type in, let's just look at something like Polkadot.USD, just a random altcoin, I can guarantee you it's down more than 76%. Polkadot, it's down from its highs 92%, and remember, it didn't even go higher. It wasn't very bullish in the bull market either. These altcoins. So Solana's holding up well, XRP's holding up well, Bitcoin's holding up well, and in all fairness, Ethereum's holding up all right. Outside of that, then you would have to pick and choose which ones are performing well or not. Most of them will probably be down a lot more. So Solana's holding up pretty well. That's why I actually don't mind Solana. I think it's here to stay. Let's go back to the comments. Yeah. Now they're not good or funny after kicking BitBoy out. Yeah, they're not. It's probably in jail or psych ward still. Do we still like MU? I mean, I liked MU. It was just a hold for me from then on. It wasn't really a. Excuse me, I felt that one coming for a while. I apologize. So, not Polkadot. MU. I've been a believer in don't sell things too early. That's why instead of saying sell, 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 I've been like hold and sell a little bit and sell if you're up a lot. But you don't want to sell it all. And that's worked out pretty well for the last year and a half. While everyone else was selling, I was saying hold. People were selling at 200, 100. We bought this at, if you look at the trade, it was at $64. So if you sold too early and now we're at $1,000, you wouldn't be too happy. So I was more in the camp of hold, sell a little bit if you really want to, but hold, 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 hold. And that's worked out brilliant. Now everyone's panicking. It's down. It's down 15%. You're up at $1,000 from $64. So am I bullish on it or not? At $1,000, it was the first time I said, okay, you can take some significant profits. $1,000 is a psychological level. But also, if you can, you don't need to sell it all because you're still above your momentum band. The trigger alert might slowly be turning bearish if we don't recover in the next week. But if we do go down, then 700 is a level that gets interesting. But at the end of the day, everything comes back to its averages. When is it going to come back down? I'm not sure. If it was going to come back down to its average today, we're looking at about $400. So there's always that risk. At $1,000, I said, okay, maybe it's time to take a significant position out. But yeah, it's still in an uptrend. You don't want to bet against the trend. You don't want to sell your winners too early. And if you sold this at 5, I mean, imagine someone took. This is where strategies differ. Some people want to see a 1% pop and a 2% pop and put a lot of money in and take that win. Some people want to get some big winners. I'm sort of more in the camp of I want to get some big winners. I bought Micron at $64. If I wanted a small win, I would have sold at $68 or $70 or $75 or $80 or $85 or $97, where the trading post was $97, $100. But no, you don't want to let. I mean, we're at $1,000. That's a 10x from where you would have sold, or a 20x from where the initial entry was. So yeah, I mean, selling too early is. There's two strategies: sell after 1 or 2% and take the win and just keep consistently winning, or get a 20x and make some serious money. I'm in that camp, and both are valid. Old days when we used to make money. Good old days when we made money used to look. Where did that speed clip guy go? I was speaking directly to him. Where's the speed clip guy? I wanted to connect with this person. Speed clips. Where have you gone? Go to channel. Oh, you don't even have any content. You've just called yourself that and you're not even got any content. Interesting. Let us know your thoughts on Solana. I like Solana. Work break says yes. Alibaba Group Holdings and Netflix at Fantastic Buy. Yeah, they are going on my list. I think Alibaba's already there. I've been meaning to add Netflix to that list. I'm not just going to buy them blindly. I'm going to do a trading post. Netflix. Yeah, what's Netflix at now? 74. Yeah, interesting. We'll have a look at it in our trading post. That's going to come out next week. Where were we? Will he be live at the bell or 6 minutes in after? Martyn, maybe Martyn can let us know. Martyn, will you do a countdown before the bell and be live at the bell? Human being Liz is asking. Wait for lower XRP and all. Sprout Bray, liking the old school Ben Elsham look. Sensor Howers, yeah, we've answered that. Discover Crypto. He's in a mental hospital. Oh yeah, I didn't realize he's back in. I've seen. I think everyone's seen the pictures of Ben. Tolboro. Now they're not good or funny after kicking BitBoy. Yeah, it's not worth it. Ben is probably in jail / psych ward still. Price targets 5 or 10. XRP price targets 5 or 10. Yeah, 5 or 10 over the next 5 or 10 years. No, I'm joking. 5 or 10. Yeah, 5 or 10 next bull market, 2028. MU to 1,300 today. Salisbury Lane, good old days when we used to make, when we made money used to look. Good morning, Sensei. Crypto up, MSTR up, and that's how it should be. Yeah, Zach said, congratulations on your MSTR buys. You're up nicely. Frankie Candles is the man. Isn't that? Yeah, I used to be the guy on BitBoy. This chart analysis wasn't very good though. Starlight Matrix, another day, another dollar. Brett said, thank you, Sensei. Really appreciate that. No worries. How did jobs report come in? Good or bad? So recap, if you've just joined for jobs report, if you've just woken up in the US and you had a little bit of a lazy morning, the data came out today. I don't have it on the screen. I'll just tell you. Essentially, we looked at average hourly earnings. That came in at consensus, so we didn't have to worry about that. If that came in lower, inflation would be lower. That would be better. If it came in higher, then inflation would be higher, and that would be a concern. But it came at consensus, so completely ignore that. Move on to the biggest thing, which is non-farm payrolls. That came in lower than expected, about 50,000 lower than expected. Last time around, got revised lower. So essentially, the jobs market's slightly cracking. And if it's slightly cracking, they shouldn't hike rates. So essentially, that's bullish for the market because there's a lower chance they'll raise rates. All we have to do now is look at the inflation data later this month, and that'll tell us the real big. Again, this month's so important for data because we're at this pivot point. Are we going to cut rates or are we going to raise rates? Well, it looks like the market's already made the decision that we're going to raise rates. I'm not in that camp. I've always said 2026 is going to be a hold. No rate cuts, no rate hikes. And I still believe that. But I need the data. The war is pretty much behind us. Oil, and the reason I say that is because oil is down to very sensible levels, maybe too low actually. So if oil is behind us, that means inflation, including oil, is peaked. But we need to see exactly what is underlying inflation. If underlying inflation is down as well, then no rate hikes and maybe rate cuts next year. So yeah. Jobs data is bad, which is good. Good news is bad news. Bad news is good news. Now we just need to look at inflation. Inflation is coming out later this month. So today, good news. Does SOS Unlimited have a chance? Poor man Twitch, man, I have no idea what that is. If that's a crypto, it doesn't sound too good at all. Just by the name of it. Kurt Savage says, bless you, thank you. How about, is that SanDisk? SanDisk, I'm a little bit less sort of bullish on compared to MU. I would be trimming out. Hello, guys. What about vertical? I'll let Vaz discuss vertical or join us with Sundays with Sensei when we look at all the chart requests. Ben loves love of Cardano. I put him in a mental institution. Speed clips here, lol. I forgot. I got into trading instead of clipping videos. It didn't really interest me at all when I got started. My name in Discord is Trading State of Mind. Oh right, Trading State of Mind. Yeah, I was wondering. I clicked to your channel. You didn't have any clips. No worries. I mean, remember, you need to make money to then invest in the stock market. You don't want to use the stock market as a way to make money. So I know a lot of people make a lot of money clipping. Random clip says, when's the next bull market? It's hard to say. I'd have to do a newsletter report. If I go off the 4-year cycle, we're in the bear market year now, the bear market lows, then the next year is the year of sort of slowly going up accumulation. When is Bitcoin halvening? 2028? BTC halvening, or 2027? I think 2027, right? Oh no, April 2028. So yeah, the bull market year will essentially be in 2028 and 2029. So 2027, yeah, you normally get a nice run up into the halvening. So that'll be 2027. 2026 is the bear market year. 2027 is the year you slightly go up, and then 2028 should be the bull market year. Oh, Martyn is in the chat. Let me. What's oh, we've got a link from Martyn. Let me click on that. Martyn will be live on the bell, so we'll go straight to Martyn. Martyn, are you doing a countdown or should I cover the opening? Will you have a countdown on your show or not? Can you just let me know, please? If you're going to have a countdown, then I'll cover the open and then send to you halfway through your countdown. Just let me know if you're going to have a countdown or not. When's the next bull market? Hopefully that answers your question. MU to 1,300 is real. Certainly can do. It won't take much. What do you think about Pump Fun? Don't have many thoughts on it. Spartan Wolf says, "What's your recent thoughts on Flare and where it might go?" We're going to go down and down and down until we have the final capitulation. Human Being Liz says, 5 minutes to the bell. Thank you. My favorite Bitcoin moment was when Ben.eth scammed him into buying Ben. Who is this new guy? Are you talking about me? I'm Sensei. You've been a member for 2 months. If you've been on the channel, you definitely know who I am. What about MRVA? If you don't know who I am, I'm Sensei. I've been on the channel about over 4 years. Talk about crypto, talk about stocks. I run the newsletter on the show. I work with Martyn and that's who I am. I'm sure there's many people who don't know who I am, so hopefully I've explained that. Warsh will manipulate the target by changing the way he uses data to make the target, allowing him to eventually lower interest rates without looking like he's Trump. Yeah, he's going to change the way. He's going to change a few things, but he can't do it overnight, and he can't lower interest rates all by himself either. He does have a good influence, but he can't do it all by himself. Oh, wow. Look at this.
I can't believe this.
Look at this. We have got 5 memberships being given away. Please do hit the like button, comment, see if you can win a membership. And please do thank 1978 Buckley for the membership. Let me do this. Market opening. Market.
I can't believe this.
Guys, you can win memberships right now. 1978 Buckley's giving them away. Please do thank her and try and win them. All you have to do is interact with the show. I'm just going to change the headline now because we're covering the market open. Market open.
I can't believe this.
All right, 1 minute to go until the market open. We've just updated the screen so you can see exactly when it opens. Only 49 seconds. Thoughts on now? I do have big thoughts on now. It's going to be in the trading post. Jay is king. If you want to see the trading post coming out, it's on the. You have to be a Sensei Premium member. The link is in the live chat. Click on that now. You get 25% discount. And you
I can't believe this.
What my thoughts are on now. Thanks for the membership. MicroStrategy $50 at some point. Maybe if we have a big capitulation, if something goes really wrong. Thank you. You're welcome. Thanks. What are we saying thanks for? Oh, the membership. Yeah, say thank you. So what do you think is going to pump? Specifically asking for Martyn. You're asking Martyn. Martyn will be live soon. Did I get one?
I can't believe this.
You would go green if you got one, even if clarity gets passed on the Senate floor. Okay, we're going to go over to the market open now. Let's go to breaking news. Here we go, market open.
People are living together in seemingly perfect
Let's go through our top
Monday,
stops. The market has just opened.
It's Phoenix.
Market has opened. Let me know if the music's too loud and I'll turn it down. But here we go. What do we have? We've got XRP up 4%. To be fair, XRP doesn't have a market open, but it's up 4%. It's our biggest gainer on our watch list. Silver up 3%, Bitcoin up 2%, gold up 2%, the FTSE up 1.2%, the Nasdaq opening up, the S&P 500 opening up 0.21%, bonds down slightly, oil down. Let's go through some stocks as well. Coinbase. Up a bit too much. I was going to buy this this week, but we might wait. Coinbase up 5%, MicroStrategy up 6%, Snapchat flat, Robinhood up 5%. I told you the reason why in the newsletter. They've launched their tokenization and their price targets have gone up. Rivian up 6%. Let me see. Yeah, the Phoenix song is on. Circle up 5%. Palantir up 3.9%. GameStop pretty flat. Dollar Tree up 3%. Vertical Aerospace up 3%. Bitcoin ETF up 2.7%. Tilray up 2.3%. Arch Aviation up 1.6%. Rocket Lab up 1.2%. Lyft up 1.8%. Pfizer up 1.3%. SMCI up 4%. Amazon up 1%. Netflix up 1.7%. DEC up 2.2%. Virgin Galactic is flat, essentially. SoundHound AI up 1.5%. Fiverr up 1.19%. PayPal up 2%. PayPal is also looking interesting. Emerson Electric up pretty flat. Apple up 1.7%, recovering after their awful price increases. ARK Invest up 1.5%. This is their innovation ETF. I'm gonna say it's not all-time highs. They're trending up quite nicely. Berkshire Hathaway pretty flat. Tesla waiting for deliveries. If you're invested in Tesla, you'll be waiting for their delivery numbers. That's coming out later today. What else do we have? Wrap Technologies is up big. They had a good day yesterday, up 14% yesterday. Wrap at $1.50. Microsoft flat. S&P up, moving 0.42%. Coca-Cola up 0.53% today. Congratulations, Coca-Cola holders. Enphase flat. Nvidia flat. Klarna flat. Luna flat. J&J up 0.63%. It looks like the S&P is pretty flat as well. McDonald's up 1%. Russell 2000 up 0.5%. Google flat. Disney flat. Dollar flat. My battery for my light flat. Joby flat. It was flat for a second. I don't know what happened. Joby down slightly. Vivo Power down slightly. DYDX pretty flat. AMC flat. Alibaba down 1%. Nasdaq looks to be down now. Mobix flat. AMD down 1.8%, and TSM up 1%. That's our watch list. Let me know if I missed anything. We did miss some of the other ones. Circle up 8%, bullish up 6%, Gemini up 3%, Alibaba down 1%, Netflix up 2%. Now Adobe up 3% as well. This is looking good. Anyway, those are some of our top positions. Thank you for joining me for the market open. That was the stock market open of Thursday, the 2nd of July. You watched me ring the bell, play the Phoenix song for the first time in probably a year. I played that Phoenix song. I felt like it was a special occasion. Not sure why, but I did. Rang the bell. Let me know what you guys looking at today. We opened the stock market with me today. How did that feel, guys? Did you like it? Did you not? Let me know. Why is Enphase dropping on today's news? This should be slightly bullish now. Yeah, slightly bullish, but again, there must be something going on with Enphase itself. I haven't looked into it. The Nikkei is up, or the Nikkei is up. Going to work out. Have a blessed day and weekend, everyone. High Energy Investments. Keep up the good work. Fitness is very important. I should get into workouts as well. Opening with Sensei today. Nice. Thank you, Petra. Yeah, it was good fun. We're going to go over to Martyn now. He's live on the bell. So let me click on that. Martyn will be live in a second. So you do 10 minutes in. Okay. I will send to Martyn in a few minutes time. Okay. So we did the market watch again. Ethereum is pumping. Let's have another look at the markets. Just speaking to Martyn behind the scenes. Martyn is going live. Okay, so we've covered the market open. Let's just see what's moving. And remember, things move very fast on the market open. So what I've just read out could be completely different now. Yeah, MicroStrategy leading the day with an 8% move up to $101. If you're wondering why MicroStrategy is moving up, then why aren't you reading the morning newsletter? Guys, the morning newsletter has been improved. I spend more time on it. Actually, some parts are now easier for me to do with AI automation, meaning I can spend time on the parts that matter more. So my insights, the stories I choose. Again, none of it's it's all my thoughts, all the real news stories. But because I can spend more time doing it, it's a new feel. So if you guys haven't read the newsletter or you've stopped reading the newsletter, get back into it. It's literally all the information. It's always improved. I looked at a newsletter we did a year ago, and the improvements just on the daily newsletter are crazy as well. So if you haven't got into it, get back into it. Make sure when you get the email, it's in your primary inbox. Go and search for the email. Go type in Sensei in your inbox, find it, swipe over, put it in your primary inbox. There's all these AI mailboxes now that are getting rid of newsletters. Find it, put it into your primary inbox, and at least click on it every day, because then you get to see the top stories at a glance. Even if you don't read the whole newsletter, even if you're a free member, you get to see what's going on. But yeah, when we scroll down a little bit, you've got the top movers. So MicroStrategy, the biggest gainer today, is also in the winners and losers. MicroStrategy is up today because of the unveiling a new digital credit capital framework that authorizes up to $2 billion. Remember, $2 billion is how much they need to sell because of their Bitcoin situation, in common and preferred stock buybacks. Establishing a formal cash reserve policy, and it lifts its STRC preferred dividend to 12%, with Citi reaffirming a buy rating on the overhaul. The revamped capital plan has driven a sharp bounce off last week's low, so they've figured a way to stay in the game, and quite clever way as well. So they're up. Robinhood's up. That's the second biggest gainer today. And why is that up? It's up because rising after launching the public mainnet of Robinhood chain. It's an AI native Ethereum layer 2 network built for tokenized stock trading, alongside a run of analyst price target increases that include a fresh raise from Deutsche Bank. So Deutsche Bank has increased its rating, and also they've launched their tokenized on the Ethereum blockchain. Palantir is also up, and then Franklin Convoy is the biggest loser. So again, you can just go to top movers to see what's moving and why it's moving. Some of the top stories today is Meta, a big story from Meta. So if I read you the one big thing, it also covers it. So Meta announcing it will sell its spare AI computing power, and that's added 172 billion to its market value in a day. The same session, the companies that build and rent computing power fell hard. Nebius lost almost 12%, CoreWeave around 10%, Nvidia about 2%. That is the message hiding in both moves. So when the biggest AI spenders, Meta, start renting out excess capacity, it started doing that yesterday, computing power stops being scarce. Everyone wants computing power. Everyone's trying to get as much computing power as possible. It looks like Meta have a spare computing power. They're renting it out. It's now a commodity. And the profit shifts from the companies that are selling the shovels, Nvidia, etc., to platforms that already own them. If you own them, you can rent it out and make some money. Watch rental prices as specialist cloud firms soften. If it softens, the AI capex boom has finally found its ceiling. Maybe they don't need to spend as much on AI, which is kind of bullish as well, but maybe not as bullish for the people selling the shovels. So very interesting story from Meta. And again, it bounced up yesterday. Maybe it's down slightly today. But very, very interesting story about Meta turning its AI bill into a cloud business. And again, a lot of other interesting stories. Tesla's numbers are interesting. Tesla, Bitcoin's bounce. Some of the other stories today, Ripple joining a big stable coin, OpenUSD. We're going to have more on that on Sundays with Sensei. And then deep dive, we gave you all the whole PDF to download for the jobs data. So do sign up to the newsletter. The link is in the live chat if you haven't done it already. Now we're going to go over to... over to Martyn. He'll be live. So we will, let me just check your comments. Ring that bell, Phoenix song. Yes, Phoenix song. Nice. Opening with Sensei today. Nice. Let me see. We had a poll running and it closed. Let me see what the results were. Does the Fed actually hike in 2026? No, they hold all year. 35% of you are saying the same as me. Hold all year. Let's see. It's slightly against us. The market really thinks there's going to be a hike, but we'll see. Yes, later this year, 30%. There is a good chance that we get one rate hike, not many. Yes, this month, I don't think so, but the market seems to suggest there's a 30% chance of that happening. Let's see what the inflation data is. No, they end up cutting this year. I don't think they'll cut this year. I think that's very unlikely. So the poll has ended. Let me see if I can run another one. My computer seems to be lagging. Should the breakfast show return? Let's just ask the question. Yes, no. Breakfast show with Sensei in brackets me, because it seems like some people don't know who I am, but one person pretended he didn't. Just a quick poll before we go over to Martyn. Quick. Vote. We need to go over to Martyn. He is live with the opening bell show. Should the breakfast show return with Sensei? Me, return. I'm Sensei, by the way. I just voted yes. You can vote no. Please be honest. Be completely honest. Do you want it? Will you actually watch it? Are you live? Are you awake that early? Let me know. Does it matter? If it doesn't mean anything to you, just put no. If you're not awake and you're not going to watch it, then just put no. But if you are going to watch it, if you want it to return, just not promising anything. Just want to see what you guys are saying. Yes or no. If you enjoyed the show today, let me know. Nike Incorporated is having a breakout. That'll be interesting. Nike was a really good level last week. Guys, please do hit the like button on the way out. Please do subscribe. Stay exactly where you are. I'll be sending you over to Martyn. He's live with the opening bell, so stay exactly where you are. I'll send you directly to Martyn. I'll give you the link as well. Thank you everyone for tuning in. Do remember, tomorrow with the XRP Ripple newsletter, that will be newsletter members only, premium members only. The link for the 25% discount on the annual plan is there. If you want the other discount, go to Discord. If you're on the monthly plan due for a renewal, maybe go check out the annual plan. Oh my God, look at this.
At Martyn Lucas investor tipped $100 through Super Chat. Yes, bring Sensei back every bloody day, lazy.
What the hell? We've got $100 Super Chat from Martyn. Look at that.
The year is 1991. Birds and people are living together.
When was the last time we got $100 Super Chat? This is incredible.
A young man catches fire. This is Phoenix.
Okay, 5 $100 Super Chats right now. I'll be back every morning. No. Guys, that's incredible. Thank you very much, Martyn. Let's see what the poll says.
People are living together in seemingly perfect harmony until one day a young man catches fire. This is Phoenix.
Human being Liz says yes. Let me turn up the volume on Phoenix. Nick Jones says yes. Sensei, yes. Woo. Thanks for what you do. Thank you. Absolutely love it. Absolutely love it. Everyone spam the chat. Do it now. Jump on this now. No choice now, Sensei. Yeah, there's not really a choice. Everyone super chat $1. Ooh, maybe that'll do it. Everyone super chat $100. Maybe. Zulu says lazy. Martyn says yes. Obviously, please. I don't know. Maybe you guys don't want it. I don't know. Guys, vote in the poll. Vote in the poll. Do you want the breakfast show to return 2 hours before the opening bell, an hour and a half before the opening bell? Let me know. Do you want me to go live in the mornings? If you do $100 super chats, I'll definitely be back. If you do $1 super chats, I think I'll be back. Let's see what you guys do. Vote in the poll as well, and then we'll go over to Martyn live next. You see the truth behind the veil, and you know that they're just looking for attention. We're celebrating the biggest super chat of the day with Martyn at $100. Thank you, Martyn. Over time, now like your fire for ascension. Like a phoenix, you burst in a fire, burn a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire, burn a thirst and desire. Transform right up in a flash. You spread your wings to rise from the ashes. $1978 Buckley says, come on, super chat. Thank you, $1978 Buckley. You've already done memberships. Now you've done super chat. Thank you very much.
Come on, let's see.
understand desire. You transform and appear flesh. You spread your wings to rise from the ashes. Phoenix.
There's 284 people watching, and we've only got 60 votes. Guys, please do vote in the poll. I'm about to end it.
Flesh, you spread your wings to rise from the ashes.
I'm sure those are the same people that haven't hit the like button, so please do hit the like button. Okay, so let me close the poll. Thank you guys for the super chats. Thank you, Martyn. Thank you, 978 Buckley. We'll see. We'll see what we do. Let's get it done. Let's see what happens. Sign the X. Oh, Ant's back. Ant, I literally told you I would sign the mug for you, didn't I? I remember having a question with you. Oh, on the Discord application process, I think. Speedclip says, yeah, god damn it. Hi, Sensei. LMT from the other day, entry 505. I know you don't trade war stuff, but anyways, give me. Thank you. I'm happy you know that. I don't have any thoughts on it. If you join with Sundays with Sensei, then we'll look at the chart. Sensei, you need a bell to ring, and yes, come back. I wouldn't be ringing the bell.
Savage tipped $2 Australian through super chat. Sensei, you need a bell to ring, and yes, come back.
Thank you very much. Thank you for the super chat. I don't think I'll need a bell because I won't be live for the opening bell, but maybe I should just get a bell anyway. I did have a really terrible bell that you guys laughed at last year. I think I threw it away. Anyway, let me end the show. Let me send to Martyn. Let me end the poll. Last chance to vote in the poll. Let me end the poll. Oh, wow. I've never seen anything like it. 70 votes. Should the breakfast show with Sensei Me return? 96% of people said yes. 96%. That's I don't think I've ever seen a number like that. And I even made it very clear to vote no if you're not going to watch it. So at least I know I'll have about 68 people watching me at least. We'll see. I'll let you guys know. I'm doing lots of updates in the background of the newsletter. So maybe the next week after, we'll see. I'll speak to Martyn. We'll see what we can do. Thank you everyone for tuning in. Let's go over to Martyn, the live on the bell. If you haven't signed up to newsletter, please do. Tomorrow the Ripple Pie is being released. Sundays with Sensei is coming this Sunday, long weekend. But tomorrow I'm going to be today I'm going to be releasing the Mika newsletter as well. So everything you need to know about the new laws. Okay, so there's the link to Martyn's show. I'm going to end the show now. If you stay exactly where you are, you'll go directly over to Martyn's show. Thank you. As always, take care of yourselves and each other. Bye-bye.